This is Terrence Andre Banks with Information Age Financial Solutions, coming to you with a fantastic article I read about retiring boomers are deflationary, right? It's actually, the title caught my attention, especially because I've mentioned in previous videos, and it's almost like I'm beating a dead horse, but it's worth repeating. Found this article, Dollar Collapse, Retiring Boomers are Deflationary by John Rubino. And I'm just going to dive right in and put a link inside the description, of course. There's never been a generation as influential for good or ill as today's baby boomers, so our mass retirement over the next decade should in theory be a big deal. One scenario has us selling our stocks and either spending the proceeds or moving them into less risky assets like bonds and cash. This reverses the past few decades' upward pressure on stock prices and sends them down hard. At the same time, we downsize our living arrangement, swapping multi-story McMansions for smaller one-story homes conducive to aging in place. Large house prices as a result plunge. Harry Dent is a well-known proponent of demographics as destiny idea. Here's his take. I want to play that at the end, but I want to kind of continue reading the article. Dent's demographic click is both illogical and ominous, but apparently it's not the mainstream view. Yesterday's Wall Street Journal ran a story on future inflation trends and had this to say about retiring boomers. The US, China, and many large advanced economies now face a demographic squeeze that could contribute to inflation. The larger the share of a country's population is working age, the more the populations tend to save, since workers in aggregate produce more than they consume. That restraint on demand tends to put downward pressures on prices. Dependents, children, and retirees have the reverse effect. They consume more than they produce. As the US population ages, the number of dependents grows more quickly than the number of people in the workforce. And inflation picks up, says Manoj Pradhan, sorry for messing up the name, founder of Talking Heads Macroeconomics, an independent macroeconomic research firm and co-author of The Great Demographic Reversal, Aging Societies, Waning Inequality, and an Inflation Revival. Baby boomers wield disproportionate spending power, said Peter Berzin, chief global strategist at BCA Research, noting this generation holds a little more than half of all U.S. household wealth. Okay, they hold a little more than half of all U.S. household wealth. If you're a group that's still spending but not producing, you can have an increase in consumption relative to production that's more likely to give you an inflationary impulse. But with most baby boomers now retired, U.S. working age population growth will slow to just 0.2% a year between 2020 and 2030, according to the United Nations, from 0.6% in the prior decade and 1.1% during the aughts. The pandemic boosted retirements by about 1.5 million, says Mr. Berzin, at least for the next couple of years, there will be this hit into the actual size of the labor force, he said. And that's a good, I love charts. On the 25, see that there. A paper by Michael Julius, a brand of Bank of Finland economist, said Ilo Taskas of the Bank for International Settlements finds lengthening lifespans initially nudge inflation lower because they spur earners to save even more for the retirement. Eventually, through a rising ratio of dependence, the workers adds to inflationary pressures. The idea of aging society being inflationary because of low saving rates seems to ignore the much bigger forces now at work in the fiat currency world. It is more likely that the soaring cost of retiree health care will lead governments to run massive deficits and then lean on central banks to finance this debt tsunami with a commensurate amount of newly created currency. That would be inflationary. And that's exactly what's happening out there right now. So yes, more financial behavior might eventually turn deflationary, but government's response to this change will be wildly inflationary. Which brings us back to the sound money community's assumption that massive debt begets unrestrained currency creation, begets financial instability. Put another way, we're screwed however it plays out. Gold discovery. Gold dramatic bull run from 1500 is only just getting started, which means you have missed the boat. Here's an ultra low price gold. You can buy it now. 100 points. Okay. Play a little bit of Harry Dent here. Let's see what he has to say. Again.
We had ever seen before.
Is that right? Japan was the first country to see their large baby boom generation peak in spending and then tail off, way ahead of the United States. And South Korea is actually the last wealthy country in the world to see this. peak in 2018. So we've seen a succession of countries, but we're getting to the point where now Europe is joining it, and then after the United States. And so this is a worldwide phenomenon, and the baby boomers have created bubbles in everything because there's so many of them. They were called a pig moving through a python way back earlier. And really, Peter Drucker was the only management expert who foresaw the importance of demographics. Economists do not understand the importance of demographics.
Okay, let us more about it from you. The floor is yours. Would you kindly go to this podium?
I'll tell you a little secret. Long-term forecasting is actually very easy. It is the short term that is hard to predict. Now, most economists think the opposite. They will tell you, well, nobody can forecast the economy past the next election because they think that politicians and all their short-term decisions and all their stimulus and fiscal and monetary policies are the most important thing. What's important in the economy is people. And what people do is incredibly predictable. Now, the first people, before Peter Drucker, to understand demographics were life insurance actuaries. They can predict down to the decimal point when the average person in any country in the world is going to die. It's like 79.6 in the United States. I think it's 80 to 81 in South Korea. It's 84 in Japan. They're the longest living country. I don't know if it's the sushi, the sake, or what, but the seaweed, but they're doing something right in Japan. What I do is focus on everything in between. People have to be born before they can do anything, so that's where it starts. People are expensive when they're young. Anybody have kids that aren't expensive? Okay. Kids are expensive to raise. They are a cost. They're an investment in the future. But they're the innovators in new technologies and new trends. And then they enter the workforce and they become highly productive citizens. And they will peak at age 46 in the United States, age 47 in South Korea and Japan. They will then spend less the rest of their life. They will retire at age 63 on average. Now, I can tell people, for example, down to the smallest things, when the average household will spend the most money on potato chips. That is age 42. Do you know why that is? It's because in the United States, the average kid was born to the average parent when the parent was 28, and kids consume, medically proven, the most calories at age 14. That's demographics. Cradle to grave. I can tell you when people spend on every major sector of the economy. Automobiles, which is where he says, I'm going to die at 79.6. That's the average person, not me. Averages make people predictable. So real quick, the point of my latest book is that we have this demographic cliff that keeps hitting more countries around the world, and nobody sees it coming. Do you think in Tokyo in 1989 that people thought there was going to be a
Okay, so I watched some of it right there. I encourage you to watch it at your leisure. Again, the demographics is truly destiny in that point, and I think he does a good job of explaining that. But what he might be missing out right now in this third term, again, that with this many people, what the baby boomers holding so much wealth as they discuss in this article, they help out a lot in terms of family, and that's going to be a big kicker right now, from at least in the immediate time, for inflation. So, encourage you to take a look at the article. Well worth your time. Watch the video in its entirety. Demographics is everything, and the baby boomer generation controls most of the wealth, and watching them is extremely important for your financial and survival and finding out what they're going to do. If this video has been any value to you, please subscribe, leave some comments. Until my next video, Information Age Financial Solutions, I'm out.